Choosing between a Gold IRA versus a 401k for retirement savings comes down to personal circumstances and goals. In this video, we will explore the key differences between both investment vehicles. To read the full article now, see the link in the video description. 401k and Gold IRAs are tax-advantaged, with 401k accounts providing upfront tax deductions, while Gold IRAs offer tax-deferred growth. A 401k is a company-sponsored plan to which you and your employer can contribute, while a Gold IRA is set up by you, offering more flexibility to invest in precious metals. A 401k, typically employer-sponsored, usually offers limited investment options, but higher limits on annual contributions and potentially an employer match. A Gold IRA allows the investor to invest in physical precious metals, which provides portfolio diversification and risk mitigation against assets like stocks. Understanding the benefits, risks, and tax implications of each can help shape your strategy and help guarantee your nest egg is golden. Let's compare these two plans to help you understand which option may be the best fit for your retirement goals. What's a 401k? A 401k is a qualified, employer-sponsored retirement plan falling under the defined contribution category. This means that you, and potentially your employer, contribute a certain amount periodically, but the payout you'll receive during retirement depends on the market value of the account. Here are some key points that presently apply to 401k plans. Number 1. They're primarily funded by the employee, with potential matching contributions from the employer, typically between 3% and 6%. Number 2. The contribution limit and an additional $6,000 catch-up contributions for those over 50 will vary from year to year. Number 3. The investment choices can be limited, as they're often pre-selected by the employer. Number 4. If your employer doesn't offer a 401k or other sponsored plan, you might consider starting with a Roth IRA or traditional IRA. What's a Gold IRA? Self-directed Gold IRAs function like traditional IRAs in many regards, but in this case the investment is centered around tangible assets such as precious metals. Unlike 401ks, which are tied to your employment, anyone can contribute to a Gold IRA. This opens up the possibility of saving for retirement to a wider range of people, including those who are self-employed or whose employers don't offer a 401k plan. Gold IRAs come with their own set of benefits. Tax-wise, your gold or silver investment earnings grow tax-deferred until you start making withdrawals in retirement. Again, self-directed Gold IRAs provide the opportunity to invest in physical precious metals, which hedge against inflation, diversify an investor's portfolio, and protect an individual's retirement from currency debasement. Let's compare the two plans. If an employer offers a 401k with a company match, consider the following actions. Contribute enough to secure the maximum company match. If your employer matches 100% up to 3% of your salary, aim to contribute at least that amount. Once you've obtained the full match, consider opening and maxing out an IRA. This move can offer more diverse investment options and potentially lower fees. To take advantage of both investment vehicles, many Gold IRA companies provide partial 401k rollover options to a Gold IRA. Finding the right Gold IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a Gold IRA, Birch Gold Group or American Hartford Gold would be two choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices, then Augusta Precious Metals would be a good fit. Furthermore, Noble Gold Investments provides Gold IRA as well as private investment options for home storage. See the links in the video description to find the Gold IRA company that best serves your needs. Tax considerations for gold investments. Investments in a Gold IRA grow tax-deferred. This means that you won't have to pay taxes on any gains until you make withdrawals. However, when you do decide to withdraw, those distributions are taxed as ordinary income based on your tax rate at the time of withdrawal. Starting at age 72, required minimum distributions, RMDs, are mandatory, just as with a 401k or a traditional IRA. Don't overlook the specific fees associated with the purchase, storage, and insurance of physical gold. However, the Gold IRA companies listed in the video description provide lower or a possible waiver of fees depending on the contract. Links are in the video description. To conclude, Gold IRAs and 401k plans each have their unique advantages. Your choice hinges on your personal financial goals and retirement plans. Remember, diversification is key in any investment strategy. Here's to a secure and prosperous retirement. If you have 100k of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to attend a free gold investing webinar hosted by Augusta Precious Metals. Thank you for watching.